Hello, Lance. Welcome to our segment today. I'm instructor CPA Aringo Frederick. Today's segment, I want us to look at advanced management accounting. And remember that we are in our revision series. So if at all you've not been able to access our revision series, make sure you do that as soon as you can so that at least you should prepare well on these coming examinations. See? So in class today, we're looking at MA, Advanced Management Accounting, and our point of concern majorly would be in relation to strategic performance measurement. I know this is one area that a lot of students normally tend to shy from, but today's session, Mwalimu is going to break it down to a point that all of us, we should be able to understand it very well. And doing this, I want us to, of course, focus on one of the questions which was tested back in our past papers. And the question that we are looking at is a question which was tested. I'm sharing with us here. That is a very good question. It will enable us to understand the whole concept of SPM, strategic performance measurement. Remember, we have various methods that we normally consider on handling the SPM. So in our case today, we are looking at a question in advanced management accounting. Advanced management accounting. This question was tested in December 2023. Question number December 2023, question number 4, part C. So that is a question that I want us to handle, given the fact that we have various methods in strategic performance measurement. Our focus here is to remind ourselves that anytime you talk about SPM, strategic performance measurement, we normally consider, of course, two measures. The first measure is what we normally refer to as non-financial performance measures. We normally talk about non-financial performance measures. And number two, we normally tend to talk about performance, or rather these are financial performance measures. See, we normally tend to talk about financial, of course, performance measures. So these are the two measures that Mwalimu taught us in our coursework. And we dealt with various methods that we were expected, of course, to understand when it comes to matters to do with solving these cases. So in our today's segment, our focus majorly will be on financial performance measures. And under financial performance measures, of course, I want us to consider this common method that is most of the time, of course, is always tested in exams. We'll be about among the method, these are residual income, and we'll also be talking about the return on investment. Return on investments. See, so these are the two methods that we will be concentrating on today, of course, based on the question that I've just shared with us here, based on the question that Mwalimu has shared with us at this point. So if at all you know you're doing advanced financial management, or you know someone who is doing advanced financial management, that is advanced management accounting, then you can literally invite them to this class. Also, what I'm doing so that you can participate very well, I am sharing the link to join this class. So it is a random class, but you can just join it. I've just shared the link on my bio, or rather on my if you check your comment section, I've shared the link there. You can join the class right now using the link. So these are what you are told. Alumax Limited produces a single product branded sulfur. The machine used to make sulfur in Upsolin. It used to, in this case, you're told that So you're told that in this case, we're told Alumax Limited produces a single product branded sulfur. The machine used to make sulfur is obsolete, and Alumax Limited is contemplating replacing it. So additional information, we're told that the replacement cost of a new machine is 1 million with expected useful life of 5 years. The machine will have no salvage value after decommissioning it. It is expected that 20,000 units of sulfur will be produced and sold at a transfer price of 300 per unit over the 5-year period as follows. So this is what you're given. Variable costs are expected to be 165 per unit produced and sold. The good examiner is also telling us that, you know what? The incremental fees cost, mainly the wages of our maintenance engineer, are expected to be 200,000 per year. Alumax Limited uses an imputed interest cost of capital of 13% for the investment appraisal purposes. Depreciation on this machine is calculated on initial cost of the investment at the start of the year. So the good examiner is asking us here, number one, to work out residual income for each of the 5 years. Number two, the return on investment for each of the 5 years. Then the marks you're given, total marks, you can see we have 6, 6. These are 12 good marks. So whenever you're dealing with the concept of advanced management accounting, number one element or any other computation paper that you're handling, more so quantitative, most important it will be for us to always understand the flow. And the flow, Mwalimu, means that you must be able to understand the formula on how to go about the same. So like, if at all you can look at our question, we were asked of the residual incomes, yeah? So it will be important for us to, number one, ask ourselves, do we know how to compute our residual income? That is a one important question that we need to ask ourselves. Do you know how to compute your residual income? If at all you can be able to answer this question, then you can literally proceed very well. So having this case, let us ask ourselves that question. How do you go about computing our residual income? Anytime we are to compute our residual income, then I understand the assignment that I should always consider our aspect of operating profit. Operating profit. In this case, we less any component of what? Capital charge. And how will you compute your capital charge? To compute your capital charge, remember, it is easy because all I'll be required to consider is to take my capital employed times the required rate of return. Capital employed times the required rate of return. This will give us what you're referring to as the capital charge. So once we have this in mind, then you'll find that you're going to make our work much easier. How? Because at this point, I will be required to check our question and ask ourselves, how will we determine our operating profit? Given the fact that Mwalimu had already guided us on this, remember, to determine our profit, we'll always be talking about CMQ minus our fixed costs. And determining our CM, if at all you can recall, we always talk about selling price per unit minus variable cost per unit. That will give us our CM, contribution margin. That is the case. So if at all you are to go back to our question, identify what were we given. In our case, we were given a value of 300 per unit. If you check note number 3, it is expected that 20,000 units of sulfur will be produced and sold at a transfer price of 300,000 per unit, 300 shillings per unit over the 5 years. You are in note number 3. This specific note here. See, this note is giving us the component of our selling price. And if you check this other note that we've gone through it, note number 4 is giving us the component of variable cost, which is 165. So I'm having 300 minus 165. In this context, it will give us our contribution margin, which in our case, with a lot of confidence, we take 300 minus 165 being our cost, so that at the end of the day, we're getting a value of 135 being our contribution margin. Our job has not ended there. Our job, in this case, it has not ended there. Why? Because I am required then to determine the following items, which we have in this case. We will be required to determine the following item of our profit given the number of years. Yeah, given the number of years. So how would we go about it? It will be important for us to know that for me to determine my profit, then I need to talk of my CMQ, which you're given the quantity minus any component of fixed cost that you're given here. So if I told you to check our question, then we were given, in this case, maybe you can take a screenshot of the question so that we can all work out together so that I can display my full board. There you go. There you go. So we're looking at year 1. So I'll just be considering whatever that I was given here. We're having, of course, year 1. So talk about like Y1. Talk about like Y2. Then we have this. We have Y1. We have, of course, Y2. We have Y3. We have Y4. And we have Y5. As per what we are given. In our case, if you can check our quantities here. Our quantities we're given for year 1, 6,000 units. Year 2, 5,000 units. Year 3, 4,000 units. Year 4, 3,000. Year 5, 2,000 units. As per what you're given. We've already computed our contribution margin, which is 135, 135, 135, 135, 135. These are our contribution margin, what you have computed. So once we have prepared this, then we can easily determine our contribution. So my contribution in this case, year 1, talk about our total contribution, what we need to achieve. Then you're going to talk about my value, which is 6,000 by 135 to give us a value of 10,000. We have 5,000 by 135, which will give us 675,000. We have a value of 4,000 by 135. We have a value of 540. 3,000 by 135. We have a value of 45,000. Then the other component to consider, 2,000 by 135. We have 270,000. Dissect that. Dissect that. Very important to note. Dissect that. So once this has been dissected, consider a component of fixed costs. Identify any fixed costs that you are given so that you satisfy this CMQ minus fixed cost. Looking at the fixed cost given, check our question. Just go back to our question. check note number 5. Note number 5, we are told the component of fees cost, that the incremental fees cost, mainly the wages of a maintenance engineer, are expected to be 200,000 per year. So then we take our fees cost here to be 200K, 200,000, 200,000. We have 200,000 and 200,000. See, these are the fixed costs. These are the fixed costs which needs to be deducted at that point. In our case, we can also see that the good examiner had given us the component of depreciation. And what were we told? If you checked our question clearly, we are told that we had an asset, and this asset worth 1 million with an estimated useful life of 5 years, and you did not have any residual value. So this is to say, my depreciation per annum will also be a value of 200,000. So then we have our 200K as well, 200,000, 200,000 at this point, see, 200,000, 200,000. So that as at the end of the day, if at all I want to determine our operating profit for each period here, this is what we're going to have. For those who are joining, remember, we are handling advanced management accounting. We are in our revisions, and the question that we are handling is August 2023. For those who are joining us, these are advanced management accounting revisions. We look at December 2023. December 2023, the question number is for part C. For those who are joining us, this is advanced management accounting revisions. We have H10 minus 400,000. This will give us 410,000. 675 minus 400, this will give us 275,000. We have 540 minus 400, this will give us 140,000. 45 minus 400, this will give us a value of 5,000. Whereas the other one, 270 minus 400, this will give us a value of 130,000. So that is our operating profit, and this is what? A loss, right? Negative. So we've established the first component in our formula, which is operating profit. Operating profit. We've established the first component in our formula, which is operating profit. I need to compute our capital charge. Our capital charge, remember we said, we are looking at the capital employed times the required rate of return. This will give us our capital charge. So how will you go about it? That's the most important question that we need to ask ourselves. How will you go about this? So to go about this, my good students, again, we follow the same procedure. I need to identify my capital employed. Our capital employed for each year, we started with this value of 1 million. So I'll be having a value of 1 million in year 1. There was a component of depreciation of 200,000 per annum. So that is to say, in year 2, I'll be having 800. In year 3, I'll be having 600. I'll be having 400,000, and I'll be having 200,000. Having our capital employed each year. And in this case, our WCC, which is the required rate of return, how much are we given? We check in our question here. We check in our question. Our WCC, that is note 6, Alumax Limited uses an imputed interest cost of capital of 13% for the investment appraisal purposes. So we have our component of WCC, which is 13%. So therefore, we multiply all this by what? 13%, 13%, 13%, 13%, and 13%. So that as at the end of the day, what we are looking at here is the second segment of our formula, which is our capital charge. So our capital charge, that is to say, in year one, we will be talking of what? That is 1,000 times 0.3 times 0.13 to give us 130,000. So I'm having 130,000. You can confirm 800,000 by 0.13, which will give us 104,000. We have 600 times 0.13, which is giving us 78,000. 400 times 1.3 times 0.13, 52,000. And this was 200,000 times 0.13, we are getting 26,000. See? So once we have established our capital charge, this is now what we are referring to as our capital charge. We can easily determine our residual income. So therefore, my residual income, we should be talking of how much here? The difference between my operating profit and our capital charge. Difference between operating profit and our capital charge will give us what we're referring to here as what? The residual income. So how will we go about it? We have 410 minus 130 to give us residual income of 280,000. 275 minus 104 to give us a residual income of 171,000. 140 minus 78 to give us a residual income of 62,000. Talk about the other bit, we're having 5,000 minus 52,000 to give us a residual income of negative 47,000. We have negative 130 minus 26 to give us a residual income of 156,000. See? So this is what we are required to handle in our question, which is advanced management accounting. Advanced management accounting, question number, of course, 4, that is December 2023. And you're looking at SPM, Strategic Performance Measurement. That is what the good examiner wanted us to do, and this is what you're supposed to do for you to earn the first 6 marks. If at all you can check the question here. If at all you can check our question here, that is what you're required to do. The residual income RI for each of the 5 years. So we worked it out. The other part, what are we asked to do? The other part, the good examiner is requesting us to compute our return on investment. That is ROI, return on investment. And you know very well that anytime we want to compute or anytime you talk about return on investment, 2 things must always tend to come at the back of our mind, and that is our operating profit and capital employed. So return on investment, which is ROI here. I've guided you on all this. Remember, what you're doing right now is simply part revisions, advanced management accounting, simply part revision. We're about operating profit. Talk about operating profit of capital employed. Of capital employed. See, so these are what we are considering here. So we are looking at how many years? We are about year 1 all the way to year 5. So having that, because we literally have everything, our task here will be very easy. We have, of course, year 1. We have year 2. We have year 3. We have year 4. And we have year 5. See, we have all the details. Operating profit, year 1, we're having the value of for 10. Whatever that you are determining at this point, divide by our capital employed. Capital employed in year 1, we had 1 million. See? Year 2, we have our operating profit of 275,000. Of capital employed in year 2, we've seen it is 800,000. This is a value. Talk about on 40,000. Capital employed in year 3, 600,000. Year 4, we are talking about 5,000. Capital employed in year 4, we have already worked it out to be 400,000. Then lastly, consider that is year 5, negative 130 divided by 200,000. Will you expect Mwalimu to work out for this? Work out for us this one? I know this is something that you can work it out, right? To solve for our return on investment. Imagine doing this, you earn all your 12 marks. Doing this, you earn all your 12 marks, which is very, very important to note. Which is very, very important for us to note. So for those who are doing advanced management accounting, Mwalimu here will be taking you personally through these revisions. And whatever that we just done, that was in relation to performance measurement, SPM, strategic performance measurement. If you are interested to join this block revision, for you whom you're preparing for advanced management accounting, if you're preparing for advanced management accounting and you want to join Mwalimu for revisions, kindly, you can reach us out on the number indicated there. Yeah, that is 0708068851. That is one option. We are going to enroll you to our revision classes. Alternatively, embracing digital, this is how you can always go about it. In our platform, and when I'm talking about our platform, Mwalimu means what? mdarasa, app.mdarasa.com. app.mdarasa.com. Go to your browser. We have app.mdarasa.com. See, in this case, on our platform at this point, this is what you need to do. After you have signed up, if at all you don't have an account, all you need to do is to search CPA. So the moment you search CPA, come to the CPA, you get started. You start learning. And at this point, you realize we have the coursework and we have the revisions. Because you are interested in the revisions, come and click revisions. All these are the papers that we have prepared for you specifically for August 2025 revision. August 2025 revision. So you do what? Advanced management accounting, or you can just scroll and search where advanced MA is. So this is advanced management accounting. If you open, then you'll find some of the content for revisions that we have prepared for you. And in this case, we are still doing what? we are still preparing for the same. So in this case, if at all you want any other course, you're doing financial management, okay, good. Go to FM, have your revisions there. Everything prepared for you specifically for these coming exams. Specifically for these coming exams. So if at all you've not subscribed to our revision package, make sure you do as soon as possible. So next time we're going to handle another question for MA. And in this case, I believe by the time you reach your exams, you'll have well prepared. So to this point, guys, thank you so much. And I hope to see you in our next